Good afternoon. It is June 23rd, 2025, and here's what we're looking at today. You kind of had to play it like a range day, and it kind of looks like it's a broad bull channel, but if you look at the daily chart, it looks like an extremely strong bull bar. And I mean, it makes sense because it gapped down tremendously from over here on the left side of the screen all the way down to here. Um, but then it shot up. And really, what I was looking at that as, I had this range drawn from Friday, and it basically tried to break out below that range and failed. So it's just a failed breakout. Um, but yeah, so let's go back to the daily chart real quick. Very strong bull bar. We've already had a break of this bull channel and move to a new high, and we pull back to the EMA. So we've been going sideways for a couple weeks now. So this could be an exhaustion bar, or it could be a sign of bull strength, and we'll go higher. We'll just have to keep watching and see. So again, going back to the 2700 tick chart, we've gapped down in the overnight. Let's see. Down to about 5960, and I just drew this range from where we dropped to the body of the last bar on Friday. And you know what? I'm actually gonna drop it down to the opening price, and I'm gonna redraw this because I was thinking we came up short of a measured move, but I bet you now that I've redrawn the box, I bet you we almost perfectly get the measured move. And nope, we didn't. We still came short of it. Okay. So anyway, we gapped down, and the market created two legs up. Then you get a sell-off. I'm guessing it's a little less than 50% sell-off. Let's take a look. Yeah, a little less than 50%. And then we find some support. We bounce. Can't match that high just yet. We get another leg of correction to the low side, and we bounce, and we form this spike and channel up. So this came after most people would come in and start trading. Let's look at 5 o'clock. So 5 o'clock, you're finding this bottom right here. There's reasons to consider that because you're near the 50% mark, and you have one push down, pull back, two push back, or two push down, pull back, third push down. So you could look at it as like a parabolic sell climax. So you could consider buying here, and it looks like people, bought. People who scale in bought their first contract, maybe took some profits here. When it came back down, they bought again, and it created this spike in channel. So I don't really see. Let me make this bigger. I don't really see a very enticing reason to be getting in right here long. Unless when you get this super strong bull bar, you just buy it with the intention of taking profits at a new high. That seems a little risky to me. On this chart, 2700 tick chart, maybe there's a setup on the 6500 tick chart. Not really. That's right here. So anyway, we form this spike in channel, and if you look, we are getting body gaps. Boom, we break out. This is the pullback. Boom, we break out. This is the pullback. So if you see that, I would consider buying right there. If you see all that in real time, those body gaps. Problem is you're at the highs, but this is a very strong spike in channel. So I think if you see all that, you have the trend line drawn, I think this is an area where you could consider buying. Come up here, you get a pullback. That's a second entry long off the EMA. I think that's pretty reliable. And I would even mark this higher low for consideration because we had prices responding to the EMA right there. You might consider that. And that's pretty much the top. So it reverses here. You get this bear channel. I don't look at this as a break of the channel. I look at it as a failed breakout. And then we make two more legs down. And you know, some people probably do see that as the break of the channel, but no matter what, you get the break or the overshoot or the failed breakout, and then we get two legs down, and it kind of bottoms out. We get a clear break, and then a move to a new low. And so you have to understand 90% of the trading that happens, probably more than 90%, is all computers. So they see these lines too. And once you get good at marking these lines up and you gain confidence in these lines, when you see something like this break of this trend line, strong move to a new low, and then it suddenly bounces right here, you know that your levels of support and resistance are aligned with the computer. So that's why it bounced right here. People just took profits. And that's why there's no follow through buying, is because this isn't really bulls being confident in it going long and it making a move up. It's just bears taking profits. So that strong bull bar is immediately followed by three bear dojis. Then we get this matching high, strong bear bar, and people jumped in there. And so I probably wouldn't take this because, you know, I'd probably be a little worried of a double bottom, but I could understand why someone's taking that, especially with how high up we are in the day. If you are betting on today being a range day, because we've been in a range for a couple of weeks now, then this is a great short because there's a lot of room to the low side. And you can see these people, if they held it through this kind of choppy downward sideways stuff, if you get in at, let's say, 60.36, you could ride it all the way down to 6,059.95. You know, if you get in this tight bear channel, there's no reason for you to exit until we get this break and move to a new low. So if you look at this as the break and move to a new low, and you just trail each of these bars, you'd get out at 60.05, and that's a 30-point move. But anyway, we make a higher low for the day compared to that the opening price and the move down here. Get a higher low, and this thing just reverses. I'm not sure if I'm not sure if you should be taking something like this. This kind of looks like a failed second entry short right here, and you get a strong bull bar, but look at all that resistance at the EMA. I think, and we haven't like gapped over the EMA at all yet. So I think it's better to hold off. So we get this bull move up, and then this looks like a bear channel. You get a bear channel, you can see it's not really forming support down here. So it's more like a triangle. And so you get like a wedge bottom. So maybe that is the place. I mean, this looks great. This higher low looks all right, but really this failure right here looks great. So I really like that one, and you can see a lot of people like that. And we get a tight bull channel. You don't want to buy above this bull bar because you're just going into the highs, and at this point looks like a range day. But this, if you got in here, ride this channel out. And again, this is a situation you might, if you see these body gaps, maybe you do buy. So boom, this top, this body right here, there's a gap to this body, this pullback, the bodies of this pullback, and then there's a gap from the high here to the body of this pullback. Same thing, gap here to the body of this pullback. So if you're seeing that, you could consider buying all the way up, because you got a gap right here, boom, here to here, and even right here to here. So that's a strong bull move. And then we just go sideways. And this is probably just people, what is it, 10:30? People probably made all their money for the day. This is a pretty tight range. Let's see. About an 8-point range. So you want to be extremely careful in here. And I don't really see much I like. If you got a better bull signal bar here, perhaps. And if you got a better bear signal bar here, perhaps. You do get a second entry right there. That's worth considering, but we are in a range. This does look like a bear channel. Oops. So there's reasons to be hesitant, but it turns out to be a good move, and that takes us into the end of the day. So here's one last look at the 2700 tick chart. One last look at the daily chart. I hope everyone had a good day. I will be back tomorrow.